Hi everybody, Cameron here, and welcome back to the channel where we break down the North Carolina real estate exam piece by piece so you can pass it with confidence. Today's focus, property taxes and insurance. On your North Carolina exam, you can expect around 4 questions from this topic. We're going to cover ad valorem property tax, North Carolina excise tax, homeowners property insurance, flood insurance, insurance issues, and a little bit on federal income taxation of home ownership. This chapter has a lot of math and technical examples, so I truly encourage you to grab a pencil and paper. Don't just listen passively, actually work through the examples with me. Trust me, it'll make a huge difference when you're sitting for your exam. Ready? Let's dive in. Ad valorem property tax, or property taxes based on value. Ad valorem is Latin for according to value. It simply means your property taxes are based on how much your home is worth. Every year, your city or county in North Carolina sets a tax rate. North Carolina expresses the tax rate as dollars per 100 of assessed value, not per dollar like some other states. So for example, if the tax rate is $1.50 per 100, that's the same thing as saying 15 mils, where mil is 1/10 of a cent. The basic tax calculation formula is taxable value, or assessed value, divided by 100 times the tax rate as a decimal. So let's try one together. Property is assessed at $200,000. Tax rate is 60 cents per $100. So step 1 is to divide our taxable value, which in this case was $200,000, by 100. That gives us 2,000. Now we multiply 2,000 by our taxable rate, which in this case was 60 cents per $100. And when we multiply those together, that's your yearly property tax bill of $1,200. Now we do have some important dates to know. January 1st, tax lien attaches to property. January 31st, deadline to list your property. July 1st, tax rates are set. September 1st, tax bills sent out. January 5th of the following year is the deadline to pay without penalty. If you miss January 5th, your taxes are considered delinquent and you could get hit with penalties. And here's the biggie for the exam. Property tax liens have special priority. They jump ahead of all other liens, even mortgages. North Carolina excise tax, or transfer tax. When you sell property in North Carolina, the seller usually pays a transfer tax called the excise tax. It's $1 for every $500 of the property sale price. Quick example, sale price $300,000 divided by 500 gives us 600. So we would have $600 of excise tax in the example of the sale of a $300,000 priced home. There are some counties with up to 1% local transfer tax, but generally no excise tax on gifts, foreclosures, or government deeds. Homeowners property insurance. Lenders are going to require it. It covers things like damage to your home, personal belongings, legal liability if someone gets hurt on your property. Common terms include premium, what you pay each month or year, the deductible, what you pay out of pocket before insurance kicks in, and exclusion, things not covered like floods. A standard policy or an HO3 covers the house, your stuff, and liability risks. Insurance policies often have a co-insurance clause. You need to insure at least 80% of the replacement costs of the home or face penalties during the claim. Flood insurance. Heads up, regular homeowners insurance does not cover floods. Flood insurance is a separate policy, usually through FEMA's National Flood Insurance Program. It covers damage to your home structure, essential systems like electrical, plumbing, and HVAC, contents if you add contents coverage, and high-risk flood zones. If you have a federally backed loan, flood insurance is mandatory. So remember, a 100-year flood zone means 1% chance of a flood in any given year, not that it only floods once every 100 years. Insurance issues, when things get complicated. Sometimes getting insurance isn't easy. Why? A property with a lot of past insurance claims is going to equal high premiums and even denial. Buyers and agents can request a clue or comprehensive loss underwriting exchange report to check the claim history. Unoccupied properties, if a house is empty too long, like more than 30 or 60 days, insurance could be reduced or canceled. Agents should remind sellers to keep coverage active all the way through closing. Federal income taxation of home ownership. Finally, let's quickly touch on taxes. If you own a home, you might qualify for deductions for property taxes, up to $10,000 with state and local taxes combined, deductions for mortgage interest, deducting points paid up front on your mortgage, and possibly deducting private mortgage insurance premiums. When you sell your home, if you've lived in it for 2 of the last 5 years, you may exclude up to $250,000 in capital gains or $500,000 if married filing jointly. But remember, real estate agents can't give tax advice, so please refer to tax professionals. All right, that's a wrap on property taxes and insurance in North Carolina. Again, don't just watch this, pause the video, work through the math examples, and write things down. It'll stick so much better and help you crush this section on test day. If this video helped you, don't forget to like, subscribe, and hit the bell so you don't miss the next chapter. Thanks for watching. Now go hit those practice problems, and I'll see you in the next one. Cheers.